Hey guys, good night. This is Tomer from the MarketZone, wrapping up a week. Before I do so, I want to make sure if you haven't read it already, I posted earlier this week a new article talking about harmonic trading patterns I use in my trading. Some of you follow the MarketZone blog know how I use these patterns every day, both in Forex and in stock. And if you are not familiar with these patterns, you can read it here in this article. And of course, follow the MarketZone blog and subscribe to the weekly markets analysis to see how I use these patterns every day, every week, and how powerful they are. And you will see it also later on when we go through the charts. So let's start going over the charts. We have a lot to talk about. We'll start with the SPY, the weekly chart. I mentioned in the weekly market analysis, I mentioned this bearish engulfing candle, the weekly candle that we had last week, and I said you couldn't ignore this signal, and we see that we had continuation move this week also, and what is more important, that we broke below a weekly trading channel which we were trading inside for the last few months. So this is another bearish sign for the SPY and probably for the financial markets. We are back inside this huge weekly wedge, probably going to test this trend line, and it will take time. This is a weekly chart, but for the bulls among you, make sure you consider this breakout candle in your analysis. Going to the Qs, we had huge rally on Thursday after Facebook report, and the Google report also was strong, but you see the gap in Thursday trying to break out of the 38 fib level. This is a resistance zone, and also today we tried, although we started low, we rallied and failed to break the 38.2 fib level. Now this is a kind of a mixed signal for me, because the weekly, as you can see, ended up as a pin bar, as a hammer, and the question is whether to consider Thursday price action as a valid price action, or to ignore the price action and see that the price failed to break resistance, and probably next week we will continue lower. If we will break above, maybe in the early next week, we could rally all the way to 61.8 fib level. Also another resistance line here. It's a little bit higher, actually, it's here. And maybe we'll see, if we'll see some strength in the market, we could rally all the way to the 87.5 in the Qs. But for now, I'm not sure that we didn't see some kind of a bluff on Thursday and today, and we have to see how Monday the markets will open. I will start with individual stock and then go through the Forex charts. We start with Google weekly chart. We see the huge candle here. This is a weekly candle covering all the rest of the small weekly candles we had before, including the bearish engulfing candle that we had last week. The question now is, are we seeing an outside bar reversal, price action reversal pattern, or are we going to continue higher? We are way overbought. We see maybe momentum is changing. We have to see how the markets will open on Monday. On daily chart, you can see that we bounced today all the way up to the top of the trading channel, and now are we going to go lower or break the 1200 level? For now, technically, I think we are going to go lower, but we have to see next week what the markets will show us. Moving forward, LEN, I spoke about in the weekly market analysis. I spoke that we reached target 1 of this butterfly pattern, and we probably will see this as support that will complete the bigger harmonic pattern, which will end around the $43 area. And you can see how a perfect touch in the 200 SMA with target 1 from the butterfly started a rally, strong rally. I said it could be entry point for those who want to take a bullish position, and those of you who did so had nice profits from this area. Now looking for 43 to complete the bigger bearish pattern, and then probably I will take a bearish position in this stock. Vivo was a huge success this week. It wasn't part of the weekly markets analysis, but I posted a special alert both on my blog and to the subscriber of the weekly markets analysis as it completed this bullish harmonic trading patterns that you see. And as the entry point was here, the 1.2, and targets were marked the 1.3 and the 1.35, and you see both of them were touched, and I actually kept part of the position open. I think that Vivo is going to the 1.7 area, which was the last weekly support. You can see the harmonics here was the last weekly support, and could be now the resistance that the stock is going to meet. You see the strong weekly candle, and I think that we might see 1.7 maybe next week, maybe the weeks after, but looks good after this kind of weekly candle. It certainly looks good. Tesla, nothing much except the stock has completed the harmonic trading pattern I mentioned in the weekly market analysis, the bearish bet. Target 1 is 165, target 2 145. You have to consider that the stock has reports in few weeks, so maybe to wait till report, but this is technical pattern, and if you want to trade it, the entry level was 185, actually these levels, the stop loss above the X, and targets 165, 145 as I mentioned. PLCM, another stock I spoke in the weekly market analysis. This strong resistance line, tried to break it another week, failed. We have 3 consecutive reversal weekly candles, a pin bar, spinning top, and another pin bar. I think that the stock could hit $11 before it will break it, because the long term I think it will break this resistance line. So there might be a setup for those of you who want to enter short, $12 with targets at 11. Keep it under your monitoring. USB, the monthly bearish AB equals CD I mentioned in the weekly markets analysis, still in play. Going to face the 38 probably as target 1. I actually took an option strategy along the 41-42 February put spread, looking good right now, and we might see continuation. We see the stock broke this weekly trend line, and I think that we will meet $38 in few weeks. Last stock I want to talk about is Mellanox. We had reports this week. I was looking at this area before report. We see the stock is stalling, and after reports the stock was going down to meet this. If you can see this square, the white square, which was trading range. So now we are facing this bottom of this trading range, and the question is, are we going to see continuation? I am bullish on Mellanox, but we have to see, since it's broke the uptrend line. Now I have to see a close above 38.5 for a bullish sign, or if we will go lower. since we broke and closed below the 61.8 fib. I guess that we might see 78.6 fib lower than the current price, and this could present a nice opportunity to long Mellanox, as it's the bottom of the support, and the 78.6 which is a reversal fib level. So Mellanox didn't do what I was expecting after the report, and now I have to see if I will find the next entry level for a long position on Mellanox. Let's go to the Forex chart. We see the pound Kiwi chart, daily chart. As you know, I was in short position from last week, took profits after 200 pips, and then the pair rallied a little bit, gave another opportunity to short with another 150, 200 pip move, and then rallied to take me out on the rest of my position in a stop loss. I actually opened another short position today. I see this pattern as a nice opportunity. I took the short position. I will see if this pair will gap down earlier next week. When the markets will open, if it will gap down to the stop loss level area, meaning that was a false break, and if it will gap up, I will let him take me out on a stop. But I see a nice opportunity, so I took another position after taking 200 pip profit in this trade. I talked about in the weekly markets analysis, I talked about the conflict I had with the Kiwi, between the pound Kiwi and the Aussie Kiwi, and as you can see, the Aussie Kiwi with the entry level here rallied this week, giving me 223 pips profit. I took the position out as it reached this resistance, and it broke out of the head and shoulder hourly pattern that I mentioned. And the question is what the Kiwi is going to do next week. For now, the Aussie Kiwi gave 223 pips and the pound Kiwi 200 pips, so I can't complain. But I took the Aussie Kiwi out completely, since I think that the pound Kiwi is going to go down. So no conflict for next week, but we have to see. The last position was pound dollar. I spoke about this broken trend line last week. We had this huge downward move. It rallied a little bit. I'm still in the original position. Gave another opportunity to enter short when a 78.6 reversal fib level hit, and you can see the pound just going down, now facing a support area, and we'll see next week where the pound will open. Looking at the weekly chart here, we see, let's clean the fibs, a nice reversal pin bar, making me think that we are going to face the next support, which is around the 162, 162.5, but we have a long way to go. That's what I'm saying. So pound, I'm still open now, 150 pips in profit, and probably I will move my stop loss to break even and take part of the position open in the beginning of next week. So that's it for this week. Very good week. You see the Forex gave more than 400 pips gains, and also Vivo and USB. A lot of positions were profitable, and I will talk about some new setups and updated charts in the weekly markets analysis. So make sure you are not missing the next edition of the weekly markets analysis. Follow us and subscribe in the www.themarketzone.net. See you soon. Bye bye.